Good morning and welcome back to Almus Market Mornings. We start the day with development on the US government shutdown. Now, President Trump announced support for the bipartisan deal to end the government shutdown. The Senate will vote to pass the spending bill, post which it will go to Congress. US equities rallied on this optimism. Dollar broadly remains range bound, but since yesterday morning, we are seeing a very strong rally in gold and silver. Good morning, JK. What's your thought in this precious metal rally? Are you looking for a recovery move or is this something more substantial?
Yeah, good morning, Swaraj. So, normally one would have thought that the gold would lose its safe haven appeal if the government shutdown were to be ended, because that removes a lot of uncertainty. However, there seems to be a thinking that once the government shutdown ended, we'll get more data on the U.S. economy and likely to be more, uh, you know, weak, which can actually lead to a rate cut by the Fed, a more certainty about a rate cut by the Fed. So that seems to be one of the reasons why we have seen a rally. Silver, of course, because once there is a good news on the risk front, silver seems to be getting a very good support also. So and in general, I think the recent dips have also brought in a few more central banks into the buying. So overall, gold seems to be getting very good support both from technical and also fundamental point of view, at least what the market is presuming to be in its favor. Speaking of the shutdown itself, the bill was passed with a 60-40 majority. And of course, the Senate is still voting because there are several amendments that needs to be, passed before it goes on to the House. But it's not that, everything is done because the deal which advances to the House, will also does not include some of the demands from the Democrats, particularly about extending the healthcare subsidies, which means that House Democrats in the in the House of Representatives might actually oppose or demand further changes. So there are some hurdles which are yet to be passed as well. And what the report says is that even in the Senate, the bill was passed because of defections from Democrats. Because till recently we have had a very tight. Situation as far as the support for the bill was concerned. Our market seems to be, taking all this in a very uh, positive way. In fact, the good fallout of ending the shutdown is that we'll get official data from the Fed to make from the government, which helps Fed to make appropriate decision on the monetary policy. Even as a Fed members who have been speaking for the last few days since the meeting, are airing divergent views on the economy and also need for more actions on rates. So this seems to be quite divided on further rate cuts and also on whether one should focus on the weakening employment side or on the inflation, which seems to be still on the higher side, according to them. Current probability of another cut in December is only 60%, as per CME's Fed Watch tool. But I would like to see the upcoming data, particularly the inflation numbers, which probably will get announced next week if the shutdown is ended. The House is being convened as early as Wednesday for a vote. That is what we will watch out. In the meantime, Tuesday is a holiday for the US markets. So we may see much lesser volatility in the markets. US markets were definitely exuberant after the news, and with all the three major indices in US recovering much of last week's losses. Although I still believe that there will be two-way swings as the year end, gets closer. But there are some people who are already talking about Santa rally. So I think overall bullishness about the US stocks continues. There is no threat to it so far. However much you speak about the valuation concerns, the tech stocks are leading the way in the global overall market rally. In fact, if you look at the results itself, the report says that out of the 446 companies that have announced results in S&P 500 index, 83 have delivered better than 83% have delivered better than expected earnings. That gives good comfort for the stock bulls as well. On the dollar, of course. Once again, just like the gold expectation that Fed will get more data and possibly will be more dovish is something that driving the dollar high, lower. In fact, however, it's not made much of a progress on the downside as well. Euro seems to have found good support below 1.15, but also equally strong resistance ahead of 1.16. So I think that seems to be the case for quite some time now. The real breakout of either side should come only with a major development, because we are not seeing much of encouraging news from the other economies as well. In fact, if you look at Japan, where the yen has now clearly broken 154 once again, the new prime minister, is talking about amending the fiscal rules, and instead of fiscal containment, they're actually talking about more spending, which is keeping the yen on the defensive. Now it looks like almost a green signal for the more selling of yen in carry trade, and that can only probably be arrested if there is an actual intervention, which some in the market are actually expecting. So I think what will be key for the dollar going forward, I think central bank actions will be important. Whether there will be a hike by Bank of Japan, whether Fed will ease more in this year, uh, whether the central banks diversify into other currencies in the next year. Now that they have bought enough of gold, whether they switch to other currencies in their diversification process is something that we would like to see as well. As far as the Indian market is concerned, although one would have thought Rupee will get some support due to the government shutdown being ended and a resultant improvement in the risk sentiment, we actually saw consistent buying in USD INR throughout the session yesterday. Indian stocks too underperformed the global peers, with actually once again almost a half a billion worth of half billion USD worth of Indian stocks being sold by FI. Once again, it was up to the central bank to provide dollar liquidity and keep exchange rate from moving further lower than 88.70. This underperformance is set to continue until we see a rebound in, or rather turnaround in the capital flows. Unlikely that even a trade deal will produce a sustainable gain for the rupee, as that will just be a restoration of status quo. Although yesterday we had once again statement from President Trump himself that there will be a good deal with India very soon. There have been many people who have been expecting a trade deal to come through or be announced once the state elections are over. So now that today is the last phase of the polling in Bihar, I think maybe that event can happen in this week also, which the market will be keenly looking forward to. Thank you.
Thanks, JK. And when it comes to the US government shutdown, while the Senate is again likely to pass the bill, it will go to Congress, where there may be some challenges because many of the Democrats might not agree to these points. And the only reason why it is getting passed in the Senate is because there are some Democrats who have sort of agreed, I think 7 or 8 Democrats, which have sort of defected and sort of got agreed on a deal which might go to the Congress. So not everything is rosy yet, but markets seem to be taking it in a very positive way. By the way, today is also a US holiday on account of Labor Day, so the volatility might be lower today. When it comes to overall currency markets, when it comes to the dollar especially, there is an expectation that is now building up that once the shutdown is lifted, that more data will come in and it will be weaker, and that narrative sort of is driving markets to a certain extent. But broadly, currencies do remain in a range. When it comes to India, also rupee USD INR traded near its highs at 88.80, and the central bank has provided the support for the rupee constantly. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.